in 5 minutes, you can kind of summarize the core points around investing in crypto assets. First, you have to understand the basis for investing in crypto assets, which is that this is a protocol-based technology. If you think about the internet has been an extraordinary conduit for the uploading, exchange, and dissemination of information. However, if you want to go and exchange value online, until 2009, there was no way to exchange that value, whether it was money, data, the title to your car or home, and do it in a way that didn't involve the same legacy institutions such as banks, governments, clearinghouses that have existed for decades or even centuries. It was just putting a band-aid on a broken system. But with blockchain technology, we finally have a value protocol, which allows for the frictionless exchange of value. Secondly, you have to understand that Bitcoin and crypto assets in general, as well as blockchain technology, enable for financial inclusion on a level we have never seen before. 2 billion people in the world have no access to traditional financial services whatsoever, and 4 billion people, including that first 2, have very limited access. With blockchain technology, people can have a bank account in their pocket. They no longer need these legacy institutions that have kept so many consumers out of the legacy financial system from participating in it simply because you've required a brick and mortar branch and KYC that most people can't pass because they don't have the identity tools. Thirdly, for understanding the cornerstones of this technology, is that Bitcoin and cryptocurrencies are just the beginning. They're the tip of the iceberg. The applications for blockchain technology are endless. Every single day we see new use cases for this tech. Some of them will be realized, some of them won't. The best ones will be 10x solutions to what currently exists in the world today, or solutions to problems that we didn't actually have solutions to before. The next key point to take into consideration is that trading is for idiots, algorithms, and the occasional arbitrage when you have really good information. Unfortunately, when most people come into this new crypto economy, the first thing that they learn about is buying Bitcoin or buying Litecoin and trading, and they read about people that have made millions of dollars trading crypto assets. And look, that happened a lot in the sort of bull market we saw for the past 2 years. But knowing that doesn't work today, when crypto assets are down and the entire market is down. And guess who has a hedge against that? Almost no one. The quants do with really high quality algorithms, but for the most part, most people are hurting right now. This is one of the reasons why I say there's no such thing as a crypto hedge fund, because you don't actually have anything to hedge with. When Bitcoin goes down 50%, guess what else is going down 50%? Pretty much everything else, if not more. And so if you think you're going to master these new crypto assets, the ones with $1 million caps or $100 million caps, say, oh, they're going to be the next Bitcoin, oh, they're going to be the next Ethereum. Maybe you're right, but you're probably not. And you're going to lose your pants pretty quickly in this space. The best strategy for investing in crypto assets is to do just that. To find assets that you truly believe in, that you believe that they're successful in 10 years, if they have an incredible team behind them, that you can go and bet on them and hope that they're successful, but not try to trade with the momentum of the market. Keep enough money to double down when those tokens go down in value, because everything goes down at once, but to never, ever try to think you're smarter than the market as a whole, because the market can stay liquid much longer than you can stay solvent. Next lesson that's really important is ICos. Incredible way to democratize access to early stage investing in a way that's never existed before. Participation in ICOs has turned thousands of dollars into tens of millions at times. And that can sound really appealing. But if you look at all the ICOs that took place in 2017, half of them are dead only 3 months into the new year. ICOs are highly speculative investments. In fact, the most speculative investments that you can make in this space. To believe that you can bet big on one of them I've seen a lot of people lose their shirts that way. It's about having a nuance and a holistic approach to this technology, because there's a lot that can go wrong when investing in this new financial instrument, which is an ICO, or initial coin offering. Lastly is a crypto asset investment matrix that I've created. And it shows the opportunities that exist in this new crypto economy. And they run the gamut of relatively low risk to incredibly high risk. And the reward profiles shift as well. At the very top right, you obviously have ICOs. ICOs are one of these things that have massive upside, but also high likelihood of failure, probably the greatest likelihood of failure of any sort of crypto asset. Then you have these utility and application tokens, which come after the ICO, but have generally proven themselves a bit more, you'd hope. And those tokens, once again, are highly speculative, because if the application that they're built for fails, the token fails. Which is why protocol tokens are probably the most interesting crypto asset in terms of investment, because as long as the protocol that the tokens are issued for, whether that protocol is Bitcoin or Ethereum, or any other protocol that issues out a crypto token as a reward, those tokens will always have value as long as someone is using that blockchain. So it's not dependent on a single application or a single team. Almost all these blockchains are open source, and thus, in the realm of crypto asset investment, it's relatively safe. Then, of course, at the very bottom left, you have security tokens. Security tokens are a new form of token, and we actually created the first one at Blockchain Capital just over a year ago. And a security token, very simply, is just the representation of something that is considered valuable and scarce in the real world and put in a tokenized form on the blockchain. The reason why this is so important and will become the largest crypto asset class in the next 2 to 3 years is because blockchains allow the whole world to become a stock market, making things more tradable and liquid and accessible to the masses. If you think about an asset class like real estate, which is the largest asset class in the world, it's highly illiquid and it's highly unavailable to the vast majority of people that otherwise may be able to have a more diversified investment portfolio with a variety of real estate assets under their portfolio. In between all this, for accredited investors, you have funds. You have hedge funds, you have ICO funds, you have these hybrid venture hedge funds, which I'm in the process of launching, and then you have the venture funds. These all have varying amounts of risk related and reward related to investment in them, but these provide institutional investors access to a much broader array and broader portfolio of assets, and often much earlier than at a point that most consumers can get in at. To be clear, this entire new asset class is risky, it's speculative, and if you get arrogant, you're going to lose your money. So be humble, have a lot of Bitcoin and Ether in your portfolio, play the long game, and you'll probably turn out all right.